All right. Good morning, traders. Happy Monday. You should see my screen, hear my voice. You should be able to chat with me and each other. Good morning, Vladimir. Good morning, Doug. Peter, Bob, Mike. Good morning to you three. Still rainy and gloomy here in Utah. Good morning, Jamie. Kent, Bit Boss. Good to see you. Good morning, Gabe. Stephen D says it's already started with a positive note. Can see in here. Well, there you go. Positive indeed. Good morning, Victor and John. Good morning, Sarah. Good morning, Art. Nice and sunny in NYC, Vladimir says. Hi, Sandy. Good to see you. Good morning, Tony Z. Good morning, Renee. Oh my gosh, what an amazing crew. Officially, good morning. Welcome everyone to the Options Income Launchpad Monday Market Kickoff. I am Scott. I'll be your host. It's actually 9:30. Good morning, Linda. Rainy in San Diego. Okay. I'm sure it'll turn sunny soon enough. What we do is for education illustrative purposes only. Nothing intended as a recommendation to buy or sell anything. We're not brokers or advisors, so we don't give personalized investment advice. Any investment or trading decision you make should be done so at your own risk, yada, yada, yada. Never need to go. Gorgeous in St. Thomas. Oh, very nice. All right. You know the drill. Our agenda is to transition our market posture, which we did yesterday. Very productive. Wasn't as big, but we sneakily gained another point. Things continue to look more bullish. The underlying conditions continue to look more bullish. Which means what? Which means as trades come, I'm willing to take more. Maybe I've increased my risk per trade. Maybe I've increased my number of trades I'm now willing to take. Maybe I've done both if I were a trader adjusting my risk to improving market conditions. That's the point, is to say, oh, well, when it was loitering down around a -2, yeah, but what we're seeing can only happen. It can only happen with institutional participation. The VIX, the long-term trend, the alignment of the sectors, etc. And Stephen D says there will be a volume day this week. All right, let's go. Futures started marginally down, -0.07, -0.18, 0.01 up for the NASDAQ, though we're now transitioning. And there you can see. My Yahoo's weird, though. It's like getting an error. I'm not sure what that's about. Okay, let me see here. Let's get our posture so that we can discuss what we saw. And let's make sure. Okay. Got something with my charts. I'm gonna have to work my way down to figure out. Give me 1 second here, everyone. There we go. Continue, continue, continue. And yeah, there was something locking me up. Wouldn't even let me get my account up, but here we go. Things are up and running. Here's what it looks like. Looks like what we had. We have something different now. And even if there were a consolidation of some kind, some sort of a pullback, that's fine. I could see us moving further. I could see us stalling and pulling back. So just got to be fluid. Be ready for whichever way. Okay. Posture. What happened? Long-term score stayed exactly the same, which is quite a good score. And in fact, you'll notice we sort of smashed our way back up into this trend. This trend back here, you can see, and through here, this red where it would interact sometimes with that blue-green trend line, those blue-green trend lines, when they could hold that was a 1.5, but the red is a 1.25. It's good, solid long-term trend score. We've seen better. We know it can hold better, but can we make some nice profits in the when this thing is moving consistently in those red zones? Yeah. What you could do is you could take actually the market posture and go back and be like, I want to look at these dates from July until, maybe around in this area here. And then and just sort of say, what was the average posture? What are we looking for? What kind of, um, anything above a 5 or a 6, those are the conditions. That's it. You're going to have the most amount of risk, most amount of trades, least amount of stops. I will hold on to trades and just be like, well, let's just see what happens. And then all of a sudden, boop, it comes back. You're just like, yeah, there it is, bull market. Everybody's a genius. That's how the saying goes. That's the whole point of this, is recognize when you're gonna be a genius so you can trade more, and then and the rest of the time dial it back. Okay, so this score didn't change this week, but it didn't need to. And again, as I said, if we were to pull back right now on the short term, and this thing came down and hit this and turned, how would I view that? I would say everything about that is good, and it held the 1.5 because it held this trend. And I would think now it's going to move on up here, and we'll all be happy together. It'll be great. So let's all hope that happens, or that it even just meanders higher and gets to the top of it now. And then we see it kind of say like, okay, now we know there may be a pullback, and again, off we go. Whatever. What I scored was convincingly back into that red zone. The short term, let's just pull it up. This will be a quick recap. Short term, it pulled back, turned, and made a higher high. It continued to increase for me. I'm a 0.5. I might be one of the slower, but my short term score tends to be less volatile than, say, the Oracle. The Oracle got as low as a -1 and is already back to a 1.5. I got as low as a -0.5 and I'm back to a 0.5. Same direction, different velocity, if that makes sense. Yeah. So it'll be interesting to see. I'm always a little bit more careful, but I recognize it's gotten better. Volume stayed the same for me for volume for pretty much everybody. That's the most interesting thing. You'll notice if you look here, we haven't seen a volume till back there at the very, very first day that started this whole beautiful move up. We had one above average volume day, and then everything else that was close, but actually still below average. Not even close. But all of a sudden you're like, oh, that looks pretty good. You're like, wait, that's 80%. There's never a time where we look back. How many times have you seen a window like this? Peter, that makes me just have a enormous smile. What an interesting ride, because the very first thing you're like, I think I may have made a mistake because it was just like whoosh, such a huge God, that was actually now I feel like um now I feel like it was fun. Like we're all kind of talking about it. I'm pretty sure I'm like, yeah, this could be the top. This thing could be at 400 in no time. Hey, man. That's beautiful. I gotta pause and take a quick peek at that thing. I saw bits and pieces of it. Uh yeah, oh yeah. Almost to four the same day, down to two, boom, boom, boom. Beautiful. Yeah, let's go back. Weren't we talking about it like right in here? I feel like it was I feel like it was right through here that we were like, hey, let's have conversation. That's beautiful. Beautiful stuff. Love it. Okay. Um, I'm gonna smile about that all day. That's just so everybody knows. That's kind of the rules here. I I'm always I always tend to evaluate traders that I interact with personally, interestingly, based on like, you know, how do they talk about their losses? Um, but here on this group, I actually encourage brags. I'm like, give me a brag. I want brags. I want everyone to share, so this is a safe zone because we all know we all adhere to the same basic premise and philosophy, and there's a lot of humility in our in our trading process, hopefully. So, anyways, sometimes it's hard to coax the brags. That's why I like to get them out there. All right, let's move on. What do we have going on? Let's look at the first 15 minutes and see what's cracking. This resistance here, you can see we got up there around 714 and a half, came back down, 714 and a half, came back down, 714 and a half, started down here, hit it immediately, immediately came down. So could be a little bit of a struggle here for a minute, especially if this thing catches. You can see this is actually kind of a interesting channel. Um, an interesting channel that you wouldn't expect to carry through the weekend, and it did. And now it's being threatened to the downside. So if we break this downside, obviously, the that has us looking at these levels down here as possibilities. Maybe not today. I would say today would be more. Those are the zones. If it was a hard day, could get down here. Really bad day, could retrace even further still. If it breaks and starts to move, we're still You'll notice, even as we speak, this candle has 2 more minutes and it's closer to holding again than to breaking right now. All right. 6 months. Did we finish the VIX or did we finish the scoring? Just in case someone missed it. Volume stayed the same. Major market got a quarter of a point better. It looks fantastic. The major market shows a huge surge by the Nasdaq. Meaning what? Meaning tech is making a move to be in a leadership position alongside small caps, which, despite my skepticism, held in a leadership position, which is what I think kept the market. If we had seen that break down, that's when we start thinking bear market, 20%. Whereas we really only kind of touched the 10% threshold on this little market consolidation. It was a correction, but nothing more. We expect corrections in bull markets. So whether it's the Nasdaq leading, which is typically what happens, this time it was small caps. Okay, fair enough. They proved me wrong. I accept that. Sector rotation, mine's still negative. I think a lot of other people's is still negative, but it did improve. It's getting close. Technology definitely trying to make a surge there, but it's a little slower. It held the strength better on the way down, and then it's a little slower to really show the distribution of new money. We're really looking for that confirmation by way of institutional investments. That's one piece there that would kick us up. What would get us a little bit stronger? Obviously, continued strength in the short-term trend would give us some strength. And continue money flow would give us get us up to another echelon, and then continued de-escalation in the sentiment arena. We have plenty of upside potential in the VIX. So those are the areas that we're looking for improvement this week. Speaking of the VIX, we evaluated it as a cross. It went and it tested and flirted up to that level there. And then, bam, that made the turn, which made that a lower high. That's the first lower high we've had. We've broken lows, which we've scored. First lower high. And you can see we did get the cross, but barely. And right now it's just sort of iffy. We're okay with iffy. We're okay with iffy. If it continues and then turns and then makes this move, that's fine. That will work out fine. We're definitely going to look to see if the VIX can get down below this. If it gets below that, our score will improve. If it does this, then it'll improve. And then all of a sudden our score is a 1. And then if we can get down into those low teens, that's when we're back to like a 1.5. That's about as good. It might get a little higher than that, but that's how we see this thing improving, is like, where do we get the points? We get some here, we get some here, we get some here, and then all of a sudden, we're in that arena. You might think if this market gets strong, we'd be down here. And if you've been with us for a while, when we have seen it in that low teens area, a new trade strategy kicks into gear that, as swing traders, it's just almost like a magic. It's just like this free strategy. It's called calendar spreads. I do them on the market itself. The SPY, maybe the QQQ. Anyway, it's a time strategy. It's just a beautiful leapfrog strategy with a directional market that, anyway, ideal conditions. That's where we're looking to go. Peter says, let's take a look at APP. All right, let's get to some stocks. Let's get to our watch list. What's moving? What sectors do we like? I'm actually going to take a quick peek at the sectors. Give me 1 second here. Um, did we? I'm getting this like weird page can't be found error. My web page is all. My Chrome is something's going on with it. All right, never mind. We'll just go look. APP. App 11. Ooh, we've traded App 11 before. Back in the day. I think App 11's looking like a setup. You can see it had a little bit of a consolidation going on, but it found a bottom, broke out, made its first big move, and now we're saying, hey, look, if this thing can stabilize, that's the higher low. The only issue, of course, can this happen and get in with that? Here we go. Okay. Okay. I don't know why. See, I think I'm having like a Chrome issue maybe across the board. It's very weird. And I can't seem to get a new web page. Finance. Okay. Now I did. Uh, let's see. I want the economic calendar. Is that, oh no, I wanted the heat map. Sorry. Oh, it's still just like so weird. It keeps wanting to stall out on me. I guess I'm not going to get that. We'll stick to the charts. Stick to the charts today. What's on our list? We had a good list. If you looked at the update, actually, Alcoa is on my list for a hiccup. Just made a big move up, pulled back, turned. That was a valid signal. Some people may have taken a trade here. That's their trade, and if that happened, it would have started pretty good and then hiccuped, and then now it looks like it's getting ready to start going. So if someone else might look at this and say, "Hey, I might take this post hiccup." We've had countless dozens of good trade alerts that first had a hiccup. That's just that's just facts of life of trading right there. Like, do we hope it just have we also had times where it's like we get in and just takes off immediately and we're like, woo, yeah. But this is what we have to plan for is that it might hiccup. We have to make sure we don't get shook out and then have it go in the right way and be kicking ourselves. Um, so yeah, I look at this and think, this is a potential post hiccup trade. Viable signal that is now giving you a second potential. If you miss the first, we'll see. Material still has some good strength. Apple. Apple pulled back. Earnings are Wednesday. No, the 30th is Thursday. Thursday after market, there's earnings. Okay. Archer Daniels, no, a little overextended. Ooh, chip stocks are a little bit getting hit. I'm gonna give it a little time to see if they stabilize and recover. I don't love it. Had a great start to this one. This may be a little hiccup here with an increasingly bullish score. I get a little more license to let stocks breathe and not be like, oh, they're gonna turn. Just be like, okay, you know, this is what's happening. Let's just relax, let it play out this morning, process it. AMK, man, this thing just won't pause. Earnings are today after market. Oh, well, we'll see what that looks like. Amazon pausing and has earnings in a couple days. APH, I would absolutely be looking for a trade here. Higher high, pulling back, higher low. Just keep in mind, we're still right smack dab in the middle of earnings season. Right in the middle of it. Last week, let's see. It was like the teens. It's been about 10 days, it feels like, since the financials started. And we've got about a 3 week window where there was a bulk of things are going to be reporting. And we're still in that window. ASX pulling back, reporting earnings. AXP on the list. So far for me, and I'm willing to take a couple. I think, and I said this same thing last week. I think financials, if you're looking for where the money flows leading to the next swing trade from a sector standpoint, financials is probably, you'll see as we come through here. There's a nice setup developing. Seems to be trying to find some stability. We're watching to see if that develops. Baba, not quite yet, but it's also not wrong, right? So we had this pullback. Where is Baba? Consumer discretionary. And in fact, consumer discretionary was one of the sectors we flagged that we thought needs a thorough stock screening evaluation to see if there's any new high liquidity leaders emerging that we need to get on our watch list. If there's going to be a surge into that group and there's a few new opportunities there, let's go find them, get them a seat at the table. This here, you can see that wasn't enough. That barely pinched, and today it's back down here, but down here is not down here. So does this look like it could stabilize and make this turn, which would pull? And that's our signal right there. Yeah, I like this one. This one looks like it could easily turn into a trade. Maybe not today, but tomorrow, Wednesday. And we'll see if any other discretionary show up. Bank of America. I mean, it's early in the day, but that's a leading candidate for a new trade right there. Just an absolute, as I say it, I'm like, let's pull up a template and start building this thing. Probably. um okay, I need to move this over. Couldn't find my template for some reason, so I just have to start over. Okay. What do we like about this? Volume is, I mean, the volatility is very nice. I'm going to save as today is 0427. I don't know what symbol yet, but ooh, come on. Ah, it's there, but I lost it. Nope, not that one. Also, I don't know why this is so big. It's enormous. Let's go with that one. Yeah, I'm driving myself crazy too, trying to get this thing situated. If I'm driving you crazy, let's make it a little smaller. Okay. Bank of America. Let's talk this through for a second. Actually, you know what? What time is it? 8:04. We'll come back to it. Let's get through the whole list. There may be something even better that we like. Whoop. Do I have my camera on? That was weird. Ha! Bob's like, we see you. I didn't comb my hair. Sorry for that, you guys. Unexpected. How did that even turn on? Has that been on the whole time? All right. What are we looking for here? We're going to go through a few more and then we're going to. I must have clicked it when I was trying to move it. Okay. BCS. Yes, except for the fact that it has earnings. So you don't have time for a trade there. They're tomorrow. Citigroup, close, but not quite. So there you can see a little difference. Now, I don't know. If I take Bank of America, then I'm more likely to take either AXP or maybe like Goldman Sachs or Morgan Stanley. At least what's on our list now. I don't want two banks, even though they're a little bit off cycle by a day from each other. I like the way City looks. I mean, to be fair, I would be very tempted because it's so strong. I don't know. Maybe I would take two. Caterpillar a little overextended, looking for a pullback. CF, no, no, not quite yet, but there's plenty of time. If this thing stabilizes and turns, we have a trade for at least a week right through here. So coherence on my list. Cisco's in a flag style pattern right now. Um, and you might be like, well, if you cut that candle in half, true. Or I could, I don't know, draw like this and say now it's starting to form more of a pennant or something like this. Either way, it is what it is. It's a consolidation. If it keeps coming down, fine. It's a pullback. If it breaks this, then it's a continuation breakout. Either way, I potentially have a trade developing on Cisco. I want you to notice that even though the market's a little, there's plenty of things around us developing. Um, Intel's been very strong. The Dow looks good. Look at that little flag style pullback. Dow Chemical, what is a disappointment? GE. Gold, I think, is actually the precious metals have a look. I might take one. General Motors, was that earnings? Oh no, they got this engulfing the day before earnings. So yeah, we're still watching. Wait. Google. I said I liked Google for a continuation. But it would have had to have been on Friday. That was the break right there. Same kind of a thing. Like there's the continuation, it breaks, it turns, and you've got like 2 days. Earnings are Thursday afternoon, I believe. Let's see. The 29th. That's Wednesday. You have 2 days. This day and two more. But it could run for 2 days. So would I jump now? I don't know. Probably not now. It's already up another 1.5%. I'd say no. Goldman. Goldman is very close. You can see that's where I said, okay, there's another potential there. Home Depot could turn. That's a consumer discretionary play. IBM, no. Intel's what sort of gave the whole chip sector a nice little bump. Um, but I don't know. There's not much here for us now, unfortunately. We're gonna have to just be patient and um, you know, watch and wait and see. IWM. So right now, to me, that Bank of America there's Mastercard, but it has earnings, which is why I think AXP needs to sit still at the front of what we're looking at here. Meta, good looking potential turn, but earnings same 2 days. Monster. Marvell pulling back. That's a little bit of the chip pullback. I mean, that thing was a monster, though. Morgan Stanley, potential there. Not yet though. Microsoft earnings. Micron still strong. Netflix, no. Nvidia still okay. Palantir, no. Here's another one that I'm looking at. Nice, slowing down a little bit. Pulling into a new support level at this old resistance area, somewhere between where it is now and 72.50. So we've got a nice little range that this thing could slide into and just set up a beautiful trade for us. Okay. Ross Stores. Yeah, Rocket Lab, I think looks great. Could be one this week. A lot of talk in the rocket realm recently in our group. A lot of different stocks being pulled up. Ross Stores pulling back in its grinder trend, just grinding higher. But hey, there might be an opportunity coming up into this one. RTX, no. Silver, maybe. SanDisk, look at that. Just these things just all of a sudden take off again. That's how they work. The SPY, let's go check in on that opening range. Oops, I went a little too far. Let me go back on that opening range. Okay, so it did break it, but then immediately regained it. So I would say, I would actually say it nullified the break. It barely broke, but it broke. I mean, I guess technically it actually held the shadow of the opening range. So maybe it didn't. I'm going to say it didn't, but we're still kind of in the range. So if it can, the buyers made a concerted effort to get back up in here. If this holds and turns, yeah, let's see what we get. Um, whoops, I want 6 months. STX overextended, TJX sideways, Tesla. Oof, all of a sudden it can't find its footing. TSM. Here's Vale. Vail looks good. Viking looks good. Couple of different things in there that could be setups for us. I'm looking at those. I mean, look at that. There's a good number of candidates setting up this week across 4 or 5 different sectors. Broader. Here's the VIX. It's a broader market. BOD is flat, holding on. WDC. Walmart's another one. Actually, I'd trade a flag on Walmart. I would trade a pullback. So if it pulled back for a couple more days and then turned, that's Thursday, right? Boom, a new trade where it catches some of that previous momentum. Okay, that's the watch list. Good looking, lots of stuff this week. Where is the core opportunity for us? I'm looking for the highs. I think I'm looking for, I don't know if I'm looking for 57.50, but maybe 56.75 or 56.50, somewhere in there. Maybe I would look for 57 actually. 57.50. Yeah, why not? Regain the old high. That's my target. That's my target. 57.50. Right there. Does that feel reasonable? That's a question. Does that feel reasonable? Let's go find a good looking move. And I'm gonna just kind of go down the middle of this thing like that. That's the move. I'm wondering if that's something we can ask for. 57.50 as an entry or a final. Oh no, the entry is now. We pulled back. We just had this bullish run. Pull back. We've got this bullish engulfing. We've got this beautiful stochastics cross down here. So I'm thinking it looks like this. Let's get a little more time. I need 10. Shoop. There it is. Yeah, look at that. Not quite 57.18. But here's the deal. Did we, what am I asking for? Well, let's act. Okay, come on now. Let's bring one of these back here and you can see, yeah, it definitely could make more than that. That sits firmly in the middle, a little higher, a little lower. So I'd say 57.50. Nah, I don't. I'm when I see things making higher highs, I want to be in them already. Mm, um, 57. I'm showing Linda. If you look here on my chart, it's going to mark it right there. 57.55. It didn't get there long. Granted, on January 5th, it got there potentially for 10 minutes, but it touched it. Unless Thinkorswim has a bad historical data feed, but I'm seeing that. Okay, let's play with this a little bit. So that's I asked for wins, made some money on Google. Gabe said, watching to see when I should exit. I think I'd ride that for another day or two potentially. Looks bullish today. Um oftentimes we get pre-earnings runs. I would try to push it a little bit, yeah. For sure. Okay. Stop loss. Right now, honestly, I would just go maybe half to 1% below today's low, 51.83. 1% below that's about 51.33, 51.30, which is down here. I don't even know if I have to go that far. I might just say 51.50 down here. That's about a buck 25. 51.50 is about $1.25 below. 51.50. What is going on? 51.50. Upside 57.50. That's not even 10%. It's 9%, 8%. Am I buying a call, Linda? Great question. Now, this is, and this will be an alert. I'll put this formally out probably here in an hour or two. I want you to draw your attention down to my bottom panel, which is implied volatility. Post earnings, all we had some vol back here. I'd be like, I don't know if I want to buy these expensive Bank of America options. Stephen D, I was waiting for you to weigh in, man. I was like, where's Stephen D talking about Bank of America? Now we're down here at the bottom. This is about as here is a little better, barely, but this is about as cheap as they get. So yeah, this is great for us. This is beautiful call buying territory. And time frame, I'm going to give it the 8th, couple extra days at most. So let's bring this over and play. Let's. We've got these slices set here. If you ever want to just take a quick peek at the reward to risk ratio, you can see that I can just do like a quick 100 shares and I'm 122 to 478. That's my stock reward to risk ratio. Sandy's like, I like it. So I take 479. What the hell? That was crazy. 470. Well, divided by 121. It's a 3.95 to 1. It's a great reward to risk ratio. Oh, you're going out to July. I honestly, I may go to the Mays and I may go to the Junes and I may just stick at the Mays. May gives me 1 week. 1 week. It's not a lot of extra time, but it does give me an extra week from what I need. I'm going to play with it. We have 9 minutes to play with this. Look at this beautiful open interest. Beautiful. I mean, look at these 55s. If this thing goes to 57.50 and I buy these for 37 cents, I'd make a huge amount of money. I'm just saying. Gabe says you can get 2 extra weeks. You can just go to Mays. The spreads are still going to be good. The lower open interest, but I agree, absolutely could. You could just go to your Junes, and that's where you're going to look at these 72,000. We'll play with this one. And I am going to play with, we'll do these 52.50s right here for a buck 34. Okay, so I've got 2. Let's do the Junes first. I'm gonna go out a week today. I'm gonna go to next Tuesday. And I typically position around $300 of risk as like a sample. So 7 contracts is around 325. That's about as close as I'm going to get to 300. If you ever want, you can just go see what is one contract of risk. 47.50. We'll call it 500 or $50. Actually, maybe based on that, maybe I'd go 6 because that would put me around 286. Yeah, a little under. Let's do 6. So it's about $50 of risk per contract, and my potential gain is great, 1,400. Fabulous. Okay. Now I'm going to go here and let's do one of these. You can see one of these actually has 84 of risk. If I get, so I'm going to do this. I'm going to do 4 of these and 7 of these. 335 for 1,400. 330 for 1,700. So yeah, you can see the June significantly better. I'm going to bounce this out. Better reward to risk. Why? Less theta. Less theta. So we're going to skip the maze. They're too close. That's what it's telling us. We're too close to the cliff. Gabe's solution, he said, I'm going to just take a 2-week step back from the cliff. I'm going to go to the May 29th. And by doing that, there'll be a cost control measure there. Because there's so many strikes and stuff, I think I'm fine. So yeah, May 29's work, June, the standard Junes. I've got 3-cent spreads. Beautiful. 3 cents. 72,000 contracts in that vein. So I could dial it back. Somewhere around there is my risk, somewhere around $50 a contract. Yeah, it's strong. A lot of contracts in there. There it is. That's what we would be looking for. So that then, when you think about this as a trade alert, the vol assessment volatility is low. So I'm going to go long calls. I'm going to go to the Junes. I'm looking at the 55 strike. It's around 97, 96, 97 cents a contract. Risk per contract's around 50, so a little bit more than half of the contract, but around half the contract at risk. Easy for position sizing. How did that process feel? Number one. I know there's some newer folk in here. If you're newer and you saw this, this is what leads to the trade alerts. This analysis, it's a swing trade analysis. Hopefully seeing it lets you just sort of be like, okay, we see these moves, and when we catch it, now what if it were to do something like this instead? It goes up and then pulls back and then up and then pulls back and then up. I got to tell you, that's a harder trade. I don't know that I'd make it all the way up. I think I'd maybe make a piece of it all the way up, and then I'd hopefully book some gains along the way. So that's something that we're thinking about. Questions, comments, concerns? We've got 3 minutes before we wrap this thing up. Here's what I think. Market posture's improved. The Oracle's almost at a 4. I improved by a point. Oracle improved a point and a quarter, almost to a 4. I'm almost to a 3. We're seeing it in our watch list, bigger watch list across a broader sector. The strike is 55 indeed, Linda. If you're looking to get an early, 55 was what I was looking at. 55, and I'll put the alert out. But yeah, UEC. Let's take a quick peek, Renee. You snuck it under the wire. Uranium Energy Corp. Yeah. So what do I see here? I see that there was a long consolidation. that it finally convincingly broke out of. It was thinking about it, then it convincingly broke. And then that's the first time the sellers, they only got it back to here, which is represented there. And now we're seeing it start to turn, and you can see it starting to pinch. If you were looking at this thinking I'm thinking about a bullish setup, I would agree with you. And it's gone through that reversal process, and now I might be thinking it's ready to start trying to make runs towards, there and then there. So it's like maybe there's a level there, and then it pulls back, and then there's a level there, and that's how it regains. Got there faster last time. But there it is. Thoughts? Do you agree? Were you looking for something different? Anybody else want to throw one out there before we wrap it up? Victor says, can't wait to handle it with that kind of knowledge. Still need to learn. I'm telling you. That platform, interestingly, was very intimidating the first time I started trading on it. I actually was like, waited like 3 months before I opened an account with them as we merged my company, my education company I worked with merged with Thinkorswim when Thinkorswim was its own company. This is way back in like 90, not 90, sorry, 2005, 2006. It's tough. You just want to get on there and paper trade. Get on there, mirror what I do, and be like, okay, I just need to find a few things. The analyze tab is magic. That's where there's a lot of other tabs that you should just ignore, to be fair. In fact, you know what, Victor? Great. This is a great one for like a Tuesday night where you just come and be like, hey, let's just walk through let's just walk through some Thinkorswim features. How do I do this? Where would I go for this? What are your favorite spots of it? Oh, that's a good one. Don't let me forget that. Anyways, good to see you guys. Have an amazing rest of your day. I'll catch you in the morning. Keep an eye out for the alerts. They should be coming this week. As always, happy trading.